Hello and good morning, everyone. Welcome to the War Room. It is December 13th, 2023. I'm everyone's favorite backup host, Jack Coakley, filling in for Dan Dempsey again today. First to start things off, if you have a question, let us know. Post a comment in the chat or send us an email at info@agyield.com. With that out of the way, I'll jump over let's go to Ryland for overnight numbers. Ryland?
Oh, geez, you put me on the spot, Jack. Looks like March corn's down 4 right now, 481.25. Jan beans 13.14.25, down 9.5. March wheat 6.14.25, down 11.25. So a little bit of red on the screen here, coming into the open overnight.
Ryland's always ready at a moment's notice. What can I say? Let's kick off the discussion here today with what we've all been kind of talking about this morning, this Argentinian peso. Peso. I'll open that up to anyone who wants to kick that off.
Yeah, so we've been talking about it around here all morning, just what the implications are, what exactly it means, what's happened in the past. Apparently, the new president of Argentina just devalued their currency. And what was the actual number that he devalued it to? Does Justin, you remember? I can't remember off the top of my head.
I think it was by 54%.
54%.
Yeah, that seems about right, Juice.
Something like that.
Yeah. So I don't know. I don't think I'm the right person to really dive into this mess, but it seems like just overall our markets did not like this news with Argentinian farmers talking about the implications and possibly actually getting paid more for their grain because of this devaluation. And also what a big piece to this puzzle was the elimination of agricultural export tariffs. So that we've seen this in the past or something similar to this.
Yeah, I think actually, Ryland, I'm not sure that that's officially announced yet, but the peso, so basically Argentine peso has been, a failed currency for the last 10 years. They've been running about, anywhere from 20 to 40% inflation. I think they've averaged 40% inflation for a while now. They've had obviously a very loose monetary policy. They haven't been, have a fiscal budget that's been responsible. So a lot of social spending led to just a collapse of the currency. And when you have a currency like that, as we said yesterday, you're really not equipped to sell and hold and store your wealth in the currency. So growers have been very reluctant sellers down there. That is their currency, as Justin mentioned yesterday. They're holding that grain until they're buying their input costs for the next year. They need to get outside of their fiat currency. They also haven't had a free floating rate, right? Like there's a black market peso to dollar rate. There's capital controls, so you can't just freely exchange at the going rate to dollars. So it's not like they really have a good alternative to storing their money in some other sort of asset other than grain. So now all of a sudden you get this 54% devaluation. That brings us up to close to the current market rate, not quite there all the way yet. And so the next step is what's going to happen. Are they going to continue to devalue the peso to get to the current market rate? Are they going to go to a free market rate? Are they going to allow the citizens to exchange directly to dollars? All of those things are negative because it's going to be a much freer flow of grain onto the world market, right? Grain, meal especially, right? Huge crushing power Argentina is. So the more free market Argentina gets in the coming years, the more competition they bring to the market.
Yeah, and I think to that, just adding to that, was such a dramatic move. And you brought it up before this, that they were kind of anticipating going to 650 pesos to the dollar. He went all the way down to 800. You talked about the free market's 950. So, I mean, a massive devaluation in one day. That's, it's equivalent of having $5 corn and the next day it's 750. right? Put it in perspective, right? So it's a huge bump, even though they've had, tight supplies, right? You always have to hold some back for that currency, or that hedge against inflation, right? So that definitely moved some grain, moved some products, because it was such a windfall in one day. So, if that continues, that's hard to tell, but the market certainly didn't like it. Meal being down 7 overnight, that's kind of rare for that product. So it's kind of making new lows for the move. And that's been probably the tightest of the products because of the, reduced crush capacity out of Argentina. So to see that one kind of make a new lows for the move, I think kind of signals what that frustration was.
Thanks for that, Justin. Any other noteworthy comments on top of that discussion?
Yeah.
Or anything else to bring up?
Yeah, I think this is not new to the market. Like, we had this when Macri was elected back in 2016. This is back when, beans first made their move back to $8.50, I believe at the time. It was at $8.50 to $9 range for a while there. Ultimately, it went back above 11 because the market had expected it to be so weak, and you flooded the market with short speculation. I think some commercials and their managed products actually got quite short at the time. It bit them a bit. And the market wasn't prepared for the fact that not enough actually came out of that. They'd never actually went to a free floating market to where they could actually still feel comfortable storing their grain in dollars or in pesos rather than grain. This does feel a little bit different, right? This is someone that has gone from 21 governmental agencies down to 9 overnight. Much more drastic than what Macri came in at, even though Macri was seen as a free market electee. So it'll be interesting to see. Hopefully, they can turn that ship around for the Argentinian people. But it's just as a reminder, in 2016, we had a lot of the same thought. The market, that is, had a lot of the same thought that Argentina was moving back to a free market situation, and he had only a couple years of being elected, could not turn that around, went right back to where they were. Right, they elected a socialist president again right after that. So I think everyone's kind of cautious about what this is, remembering that from 2016. So we'll just have to continue to watch to see how the market reacts and what actually gets done down there to move to a free market.
Yeah, I would say it's just a comment to that. I think this is more of a reminder of how fast geopolitical things can change our markets. So you had people screaming over the weekend that here we go right to $14, $15, and we do a head fake and go right back down to close to 13, right? So it just shows how volatile and choppy these markets are, and something can change that really have no control over, and it can be a big impact. So this so far it hasn't been that big of a move. I mean, you're talking 35 cents off of yesterday's highs, but again, it's probably 70 cents off of where people thought it would be today. So, these things do change fast. And, if he honestly does make some really big changes, it's probably more of a medium to long-term impact to our markets than, in my opinion, the next 60 to 90 days, right? It's probably something that's more, years down the road, real change, real investment, real production changes, more willing sellers, all those kinds of things. So I would call this more of a, knee-jerk reaction, but probably more of a more meaningful impact in the medium to long term.
Yeah, that's what I was going to say. Knee-jerk reaction, right? Like, right to your point, Justin, you go from one day getting $5 corn to $7.50 corn, but the value of your currency has dropped for everything, right? Everything you buy, your input costs, right? So that might feel really good at first, but then everything else that that's valued in that currency has gone up, right? So then by the end of the day, maybe it feels good at initial reaction, but long term, then I think to your point, right? It's the long term changes that's going to make the real effect on the market, and hopefully, if they get inflation under control and they get some stabilization in their currency, some trust from their citizens in their currency, trust from investment money to come into the country to pour in. If they can feel like it's, pegged to the dollar more securely, they're actually start using US dollars. It's going to be a huge boost for their economic growth.
And that would echo the sentiment of his statement following that, which was, this may hurt in the short term, but it's necessary for long-term growth for Argentina. And it was something that was backed by the IMF. So there's a commitment to that. And I agree. I think that long-term it has a better effect and outcome for Argentina and an impact on our markets.
Well, I think that part about the IMF is important, right? I think, doesn't IMF own the majority of their debt?
I think that's correct.
So that's important, right? That was kind of one of the big things, like, yeah, well, let's see what the IMF says about this. The fact that they're like, the only way through this is to fix it. So I think that is important for actually getting some change here, in the coming year.
Excellent. I'm going to kick it back over to Ryland to talk a little bit about this bounce in cattle. Ryland?
Yeah. Thanks, Jack. 3 days straight up from the bottom last week. So we're starting to feel a little bit more optimistic. Cash trade so far in the north, light trade, very light trade in the live side, 168 in Nebraska and Iowa. So did see a little bit of an uptick in choice beef. That would coincide with generally more of a seasonal kind of move. We closed over the 10-day moving average. I know that's Johnny's favorite moving average. So just wanted to make light of that. February, that things are starting to get a little bit more optimistic. We want to be cautious, of course, but now, as we said kind of yesterday in the letter, that now's kind of the time to start thinking about where we need to be at as producers, just from a sales standpoint, if we feel like we're undersold or if we got some production that we need to hedge. Just having those goals in mind. Feeders started to turn around as well, so we'll see if this can continue. Generally speaking, it does feel like we deserve a little bit of strength, but on the other hand, it's been a liquidating market, and you've beaten up anybody that's really been long for the longer term here. So hopefully things start to stabilize. We know the funds kind of reduce their position down to a more neutral level, if anything. So we'll see if anything comes up in the next couple of weeks here to change that. But yeah, there's some macro stuff, that could change things down the road. I know we got FOMC today, and we are looking at NOPA crush at the end of the week. And the EIA report today. So there's a lot of macro stuff in the air. I doubt much of that's going to affect the cattle market just in the interim. But a little bit more encouragement, and we're looking for some follow through today.
Yeah. Hey, Rylan, I got a question on that. Sorry, Dustin. Again, like, I'm not a cattle livestock expert, but just general markets, I think you're just looking at a cattle chart. I think you have to say the highs are in, like trading from that perspective. And it's a matter of what kind of a bounce recovery type area to give you a second chance. You look at, it's hard to look at a market that's been in such a big bull market over time and have such a significant break. I think you have to respect that kind of as the highs, right? And trade accordingly or hedge accordingly.
Absolutely. Yeah. And, we were looking at charts yesterday of 2014 and 2015, the price action as the market after it had topped. And there was a pretty significant bounce. Dustin, you remember the chart from yesterday? There was almost a retest of the highs in a very short period of time, but it did not last. So once you get into these markets that feel like, oh yeah, they've topped, it's all over, we're going to zero, if not negative, just from the way the direction and trajectory of the chart looks, we've seen it a lot of the times. You'll get a 50 or 60% retracement off of some of these kind of moves. And that's why I mentioned, just as a producer, if there was a number that you had that you could look at and say, I want that, I definitely want that, that's a profitable level. You want to have something actionable. You want to have a plan of attack, I think, on these markets, because with the limits that they can trade now, you can get a $5 bounce here and $10 bounce in just a matter of a couple days. We're starting to see some of that right now. It's been 3 days. It feels like you've only moved a little bit of a direction, but you're talking, pretty significant bounce in 3 days that just doesn't feel like anything because it's been straight down.
Well, just to that point, I think especially in commodities, you can almost take the commodity off the chart, and when you get into these big liquidating markets, I'm not a technical guy, and Ben can argue with me on this, but I think technicals really matter in these kind of things because they'll rally or something right back to the big moving averages, the big areas where they kind of broke out, and those are usually pretty good areas for, looking at, hey, where do I sell kind of a rebound in this big break after this big break.
Yeah, absolutely. And like feeders, especially, with one of these markets that, like, if you have an $8 limit right now, and you can expand to $12, I mean, like, you could put those moving averages are $20, $25 above the market, and imagine that there's going to be a lot of air between where we're at and the highs now, so I think it's important to reestablish that bottom line.
Well, this goes back to what we saw in the summer grain markets too. If that is in fact the high, change is hard, right? We go through we've had these kind of multi-year bullish grain markets, and even after we went up and we cleaned out the book, we were 636 in corn back in December last year, went all the way back down to 490. We went to 630 in the summer, and then had chances to sell above 560 and above 520 on at least 2 occasions. So the market will send its signal, but going back to what Ryland said, like if there's an area in there that works for you and it's in conjunction with a pullback, it's probably not a bad place to step in. And you can always trade that exposure out for options if you need to, if you have some fear of missing out. So the change is hard when markets turn, especially as you get conditioned to a really strong trending market in one direction, right? And we've seen this, so.
Right. And, also especially the cattle market, it really trades ahead of the data. I mean, it's a great futures market. Even though the near-term fundamentals have obviously been led by the action in the futures market, still a firm believer that the market's never wrong. It makes these moves for a reason. And just looking at, okay, there was a story going into this that led us to the highs. What changed in that stories that made everybody want to get out and run for the door? Obviously, there's something in this market that somebody sees somewhere down the line that would say, hey, I could probably get out of this position. And overall, it kind of feels like the market's pretty smart. I would just say it. Sometimes it can overshoot, as we say, but it just feels like, you even though the fundamentals are still relatively firm and not haven't taken it on the chin like at least the futures market has, there's some anticipation in something, and we need those next data points to really prove that the price has reached that level that it needed to reach.
Hey, just really quick, markets are open. Not to cut you off, Ryland, but corn's down 6, wheat's down 14, and beans are down 17, meal down $10. So some follow through from that overnight trade. So, Dustin, your point's weird. Now you got wheat and beans all down at the same time. So we'll see if that holds actually once in a row.
Yeah. And we also had a new crop bean sale this morning too. Just wanted to point that out as well.
Yeah, for the 123,000, I think.
Yeah, 125. Yeah.
25. Okay.
Yep. For 24.25, not bad.
Yep.
Great stuff. Right. Any other parting shots? No.
Oh, thanks, Jack.
Yeah,
thanks to everyone who showed up as well. And like I said, we're always streaming on YouTube, X, and Facebook. Give us a subscribe or a like and a follow, and we'll see you tomorrow morning, same time, same place.
Sounds good. Thanks, Jack.
Have a good day.
Take care.